morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. I'd like to talk about the equity markets this morning. Equity markets have been acting very strong. The uptrend continues. Basically, last week we talked about resistance levels on the S&P between that 2040 to 2060 level. The S&P powered through that last Thursday and Friday, got up above those levels. Same thing on the NASDAQ composite. We talked about upper resistance at 5,000. NASDAQ powered right through that. And really the big story is if you look at the NASDAQ 100, it's almost at all-time highs. So it's interesting. You have a market that's kind of correcting, still choppy and sloppy, but you have the NASDAQ 100 nearing all-time highs. So that pretty much tells you that this market may have some legs and it may go a little bit higher. Now, one thing in the back of our minds is we kind of compare this correction back to what we saw in 2011. And just as a side note, pretty much back in 2011 at the end of October, when S&P and NASDAQ got above its 200-day moving average, just like we did last Friday, it pretty much had one more leg down before we continued on higher towards the end of the year. So that's just something to keep in the back of your mind. However, other positives going forward for the market that can drive it further is the same old saying, you can't fight the Fed. And basically we saw hints from European central banks that they may do some more easing. And then we saw China, again, for the sixth time since last November, cut its interest rates. That pretty much spurred on this rally. So, and even if the Fed, our Fed does tighten about a quarter point, they're still going to be very accommodative. So you have this wash of liquidity. We're approaching a seasonally good time in the market. The market moved above its 200-day moving average. And then what we also see is underexposure for active investment managers in this market. So they may need to chase this market, go in there, start buying. They may drive this market higher. Now, one of the stocks we're looking at this environment, it's a Chinese stock. So the Chinese market may do well because of stimulation. This stock may do well. It's called Netease, and the symbol is NTES. The reason we like it is we saw some really good acceleration in earnings and revenue over the last few quarters. Basically, the earnings have increased from 9% to 20% to 24%. And for the third quarter, also, their estimates are to increase at 24%. Revenues have climbed from 39% to 55%, 65%, and we're looking for revenues for the third quarter at 77%. So it has a return on equity of 23%, zero debt, pre-tax margins are 48.8%. And basically, it's a China online gaming. It's trying to switch a little bit from the PC gaming market to the mobile market. There's some talk that the mobile market profit margin may not be as high, but they'll still do pretty well. The online gaming is supposed to grow for about 27% between 2015 and 2018. So we're seeing some good growth rates. Now, technically, why we like it is it reached a high of about 155 back in June, corrected about 33%. Right now, it's coming up the right side of its base, and across may create a little handle right about that 140 level, and that's where we're buying it. We've been accumulating shares of it on Friday. We're looking to buy a little bit more today. Now, we're not going to chase it. We're going to buy it as close as we can, that 140, 142 area, not chase it past the 147. And if it falls below the 135, this trade may not work. So as always, consult your financial advisor if this trade is for you. Let price and volume be your guide. Look what's going on in general indexes. Look what the leaders are doing. We saw a lot of strong leadership, and this morning we see some of the large cap biotechs that were sort of lagging in this market, specifically Gilead and Celgene, acting very well, and we have the large cap stocks doing well. Amazon, Google, Apple's a little off today, so keep your eye on those stocks, and that's going to tell you which way this market's going to go. So it's a lot I threw at you there, but in summary, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago.